there once again. Today we'd like to focus on what the steps are that you can take to achieve a feeling of financial stability in your life. We recognise that Australians are really feeling the pinch financially at the moment, and in WA it's even more heightened due to the retraction of the mining industry. So we sat down with our financial advisor Brad Cochrane earlier this week, and he told us what he thinks the 5 main things are to focus on getting right with your money in order to feel financial stability. His advice goes beyond just paying your bills on time. He looks at doing things today that will make you more secure and stable in the future, focusing mainly on the long term. So to read more about our financial advisor Brad's recommendations, visit his blog on our Mortgage Choice Perth website on the address on the screen now. What I'm going to do over the coming weeks is explore each of his recommendations in more detail to explain to you what you might need to do to apply his advice. Today, I'd like to expand further on the most important first financial step that we think you need to take for financial stability, and that is clearing your credit card debt first and foremost, before saving for a holiday or for a house. Are you aware that Australians currently have a collective outstanding credit card balance of approximately $35 million, with the average person owing about $4,700 per credit card? Most of this debt is being charged between 15% and 20% interest, which is costing the cardholder around $600 per year. That's simply paying $600 in interest to keep the debt at the bank. Sounds crazy, right? Well, our biggest piece of advice about credit cards is to pay as much above the minimum payment per month that you can without using it again if possible. For example, if you just make the minimum monthly repayment on a credit card with an outstanding balance of about $4,400, which is around $70 per month, it'll take you 31 years to pay it off, and you'll pay the bank approximately $14,900 in interest. If you were to increase that monthly repayment to $216 per month, you'd pay it off in just 2 years, but more importantly, you'd save yourself $9,700 in interest. That $9,700 would be a substantial start to a deposit on a home loan or a holiday, wouldn't it? The second piece of advice about credit cards is to not have any direct debits coming out of your credit card where possible. All your direct debits should come from your savings account, where you can include the commitment in your weekly and monthly spends and ensure that you're committing yourself to regular payments and activities that are within your budget. So, if you want to learn more about this and any other budgeting tips or how to plan your financial future, please call my team at Mortgage Choice in Perth to speak to our advisor Brad Cochrane today. Ciao for now.